Hello and welcome to the weekly wrap. So this week has once again been a very busy one in the marketplace. So just in terms of one of the main central bank releases this week, that was the BOE's quarterly inflation report. So ahead of the report we did see those UK job numbers, which did show a bit of a pickup in UK wage growth. So we did see a bit of upside for cable, however this was swiftly erased following the release by the Bank of England. So one of the main takeaways is they did slash their GDP and inflation forecast. That was very much as expected. However, the main surprise is that they actually see inflation dipping below 1% within the next 6 months. So just in terms of rate hike expectations, the market was currently pricing in a rate hike from June before the release. However, now that's now been pushed back to September, so quite significant impacts on the future path of BOE policy. Then looking ahead next week, we do have those BOE minutes release, so they're supposed to be a bit of a non-event now, given that it's unlikely that any other NBC members are going to follow suit with Wheel and McCafferty in voting for a rate hike, given the current outlook at the central bank. Then elsewhere, investors in Japan have actually been quite interesting this week. So on Sunday evening we do see the release of the Japanese GDP figures. So depending on the outcome of these figures, there's been continued speculation throughout the week that PMRB could actually call for an abolishment of the further sales tax hike. So this would obviously be a very popular move in the eyes of the Japanese electorate, and PMRB could actually cash in on this popularity by then calling early snap elections. So this theme has supported the Nikkei 225 throughout the week, as well as once again providing further momentum to that dollar-yen rally. So we're up around 3 points off the weekly lows at the time of this video. So it's definitely a key thing to be watching out for there over the weekend. And then another key theme throughout the week has been once again the crumbling in oil prices. So we saw Brent, that broke below $80 a barrel for the first time since 2010 yesterday, and WTI, their prices shaved off around $3 yesterday. So that's a continuation of the theme that OPEC just aren't seeming willing to intervene and control the global glut of oil on the market at the moment. So we have seen a bit of recovery in oil prices today, following a bit of profit taken from shorts. However, ultimately, heading into the end of November, all eyes will be on that OPEC meeting. So we did see the IEA today say that pressure is building on OPEC. However, OPEC themselves still don't seem to be inclining that they will actually intervene. And one of the main fallouts of this has weighed on commodity currencies such as the Canadian dollar and the Austrian dollar, as well as weighing on some of the energy-related stocks across the world, to the point where now Exxon is actually the third largest stock in the US after being replaced by Microsoft due to the effects of the recent fall in energy prices on the company. So that's all from me, and I hope everyone has a fantastic weekend.